What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. So it says here, S&P 500 closes higher as Apple lifts market. So let's get into it. It says stocks rose Wednesday thanks to a jump in Apple as investors analyzed the latest batch of corporate earnings. The S&P 500 gained 0.7%, yippee, while the Nasdaq advanced 1.2%, that's great, and the Dow rose about 0.2%, great as well. So Apple jumped 5% after White House officials confirmed to CNBC that the iPhone maker is going to boost its investment in domestic manufacturing by $100 billion. That brings its total U.S. investment to $600 billion over the next 4 years. Those moves follow a losing day for the market, marking the S&P 500's fifth down day of the last six and the Dow's sixth negative session of the past seven. So by and large, this is just kind of a digestion that is still continuing from the elevated volatility that occurred at the end of last week, as the payroll report was disappointing and the Federal Reserve did not cut, said Michael Green, portfolio manager, chief strategist at Simplify Asset Management. We're just in kind of a holding pattern right now. That's what he said. Investors have been grappling with the potential impacts of President Trump's tariffs, which Green said have not been as bad as we thought they might be. So on Wednesday, the Trump administration announced that it's imposing another 25% levy on goods from India, putting the total U.S. tariff rate on goods from the major U.S. trading partner at 50%. So people are starting to recognize the tariffs have a different impact on the U.S. as an importer than they would if the U.S. was a major exporter. And things have generally calmed down, he told CNBC. Now we're in just a little bit of wait and see mode. So our earnings season continues with companies reporting strong results, with 81% of the S&P 500 companies that have reported to date trouncing expectations according to FactSheet. So among the day's outperformers, McDonald's moved 3% higher. Still eating that Mickey D's, right? I can't remember the last time I ate at McDonald's. So either way, they moved 3% higher after the fast food restaurant chain second quarter results beat the street's estimates on the top and bottom lines. Same store sales grew at the fastest pace in almost 2 years. Arista Networks also rallied 17% on a stronger than expected report. On the flip side, Snap shares tumbled 17% after revenue came in slightly below expectations. And Advanced Micro Devices fell 6% after posting adjusted earnings per share that missed estimates. So Green worries that investors are not rewarding beats as they have in the past. I am. That's why I continue to dollar cost average into the stock market. But either way, he's suggesting expectations were elevated heading into the season. So there's increasing questions about the quality of the earnings that are emerging, he said. And that's pretty much it, people, for the market. I have to hurry because I have a meeting in a few. So let's see what some stocks did today. Let's start with NVIDIA. NVIDIA gained at $1.16 today, closing out at $179.42. Meta gained $8.53 today, closing out at $771.99. Apple gained a whopping $10.33, closing out at $213.25. Palantir gained $6.27. Palantir had a good day again today. Well, either way, they closed out at $179.54. My Information Technology ETF, FTEC, gained $2.46 today, closing out at $205.83. Tesla gained $11.19, closing out at $319.91. SPLG, S&P 500 ETF, gained 55 cents today, closing out at $74.44. And Broadcom gained $8.74, closing out at $301.67. And that's pretty much it for today, people. Hopefully you guys are investing, like I said. In order to invest, hopefully you have the cash flow to do so. If not, if you have a lot of debt, get out of debt, get out of debt. And the only way that you can get out of debt is by creating a budget. Get out of student loan debt, get out of credit card debt, get out of personal loan debt. Just get out of all forms of debt. Pay off your debt by creating a budget so you can start telling your money where it needs to go each month. I guarantee you, if you create a budget, you will find money. You will find things to cut back on. You can find things that you can do without. You can stop going to Starbucks. You can stop going to McDonald's. You can prepare your own food. You can make your own coffee. Save money, right? Pay off your debt. And while you're paying off your debt, stop all investments. Stop your 401k so you can throw all of your income at your debt. I know, just stop it. Stop all investment. Throw all your money towards your debt. And then once you're out of debt, then you can start investing 15% of your income into retirement. You can put away 3 to 6 months of living expenses for your emergency fund. You can start funding your kids' college fund, your 529 plan for them. Then if you have a mortgage, then you can start tackling your mortgage. If you don't have a mortgage, save money, and put up to 20% down and finance that home for 15 years instead of 30. When you finance a home for 30 years, the interest that you're going to pay on that home is almost the same amount you pay for the home. So that $350,000 home, by 30 years, you paid off $675,000. You know, yeah, that's crazy. Either way, finance the home. You know, the home may be worth $800,000, but why pay $675,000 for it? And then if you were to sell it later on down the road, you know, say you're going to move into senior citizens apartments, say you're going to downsize and it's now worth $800,000, but you pay $675,000. But either way, here nor there. What if you just financed a home for 15 years? You may pay an extra, who knows? If you pay it off early, you may pay another $50,000 to $75,000 in interest. So now you paid, you know, $425,000 for that home. I don't know if my math is on or off, but either way, you understand what I'm saying, right? And then now the home is worth $800,000. Later on down the road, you've made so much money, and less money came out of pocket to pay for the home. But either way, like, comment, share this video, people, because I have to go. Let me know what you think. If you think anything at all, but most importantly, again, get out of debt. Disclaimer, I'm not a financial advisor, nor am I pretending to be one. Any and all information on my channel is for entertainment purposes only. So please, please, please consult with a financial advisor before you invest any of your hard-earned money. All right, so you guys take care. Have a blessed day. Peace.